All right. Good morning and happy hump day, and welcome to the stream. My name is Jacob Gabbard. This is Invest with Jacob. We are live streaming our indicator today, which we do every Wednesday, 9 o'clock Eastern Standard Time, about a half hour before the market opens. We get started just to kind of go over questions and get you up to speed with what we're doing here. And right now, we are actually, this is a good training. We're going to jump right into a quick training session if you don't mind. We're actually looking at a failed breakdown setup. So, what we got is we got to move down. So, our first support was 86 up here. They tagged it several times back here and then broke through. Next support down was 69. They came down, got through 69, made a low. Okay. So, what we're looking for is we're looking for support to break and then get reclaimed to indicate a failed breakdown. So, they break it. They dead cat us here, and we know it's a dead cat. We don't know it's a dead cat until after the fact, but it doesn't matter. That's not important. But it is a dead cat because they make a lower low. So they come down and they set the low here at 693 or 69.63. So they swept support, and this is the key to the trap, right? So this is how they trap traders. First thing they're going to do is they're going to sweep support. So who gets trapped here? Well, anybody who bought support. They get stopped out in most cases, and also anybody who wanted to short a break of support sees this, they get short, and then they trap them. So the first trap is stop out any bulls. The second trap is stop out any shorts. Now, here's what we've done. We've set a low under 69, right? We got back above 69. That tells us price wants to be above it. But what we want to see is we want to see another test of 69. We don't want to see, we don't want to buy yet, is what I'm trying to say. They come back, they get below 69 again, and then immediately reclaim it. This tells us there's not enough supply over here to continue making lower lows. They have trapped twice now, so the folks who got long here probably got stopped out on this rebreak of support, and now they're likely to make their squeeze. The squeeze, okay, just simply targets first the next support level up, so it's 86. So we would be looking for an 86 target here as long as this low holds. This setup is pretty darn accurate. It fires quite often, and we would be looking for that as our failed breakdown setup. So again, they break the low, they reclaim it, they come back to it, and preferably below it, but they can come just back to it if they want, but preferably below it, and then reclaim it again. That is a failed breakdown. And what we're looking for now is our entry here, and you're looking for your first take profit at 86 if you're trying to trade this kind of setup. That is not part of the indicator. The indicator fires based on different metrics, but part of this type of setup is included. It did get this sell here. It fired up here pretty quickly at about 78 and took it all the way down to 67. So that was a 10-point move down. That would have been a winning trade. This buy here was okay at best, but we don't trade pre-market. So let's get started about the indicator so you can understand that. With the indicator specifically, it's built on volume and key levels. So it is looking for volume upticks at key levels. So you can see 69 was a key level, right? And they swept it. And what you got here was a volume uptick and a good setup of reclaiming. So they took a long here. And I mean, it wasn't terrible. You got, 5, 6 points on the SPY. And that's really what we're looking for. We're looking for really 7 to 10 ES points is what the indicator is looking for. Because that's a really nice trade. I mean, if you trade one contract, that's 350 to $500, and you have minimal risk on it. So that would be how you're trading the ES. Now, we traded on the SPY. However, recently I've been trading futures, and I'm very happy with it. So I may be converting to futures trader here soon. But overall, we are looking at, one second here. Overall, we are looking for my computer to respond to me. Sorry, guys, give me 1 second. Okay. Overall, we are looking for key reversal periods or key reversal places. And we don't trade that in the pre-market because the pre-market volume is so low. So if you're going to trade pre and post market, it's better to trade things like it's better to trade things like failed breakdown setups if you're going to trade in the pre and post market and not use the indicator because it's not built for that. It's built for regular trading hours when volume is normal. Low volume confuses it because when you get low volume moves, typically those can be weak. And so it's looking for some kind of reversal that may not be there because it thinks it's low volume, but in actuality, like this move right here has an uptick in volume for the after hours period, right? But it's low volume overall, so it may consider this whole move to be weak and look for a sell, which it did and worked out. But it doesn't always work out as well because of the volume issues. So we don't trade it in the pre and post market. The indicator is called IWJ Pivot Point Pro. It has netted us 85,000 in 2025. That's trading mostly 25 contracts. We switched to 50 contracts late in the year because we were so successful. We could up the amount of contracts we could trade. So if we were trading option contracts at 25 contracts per trade, we had made enough money to reasonably size up to 50 without risking too much capital because you don't want to be risking more than 1 to 5% of your capital on any given trade. And when we did that, we saw great success toward the end of the year with that. We had 2 record months and we had $85,000. Now, we started this in 2024. In 2024, we had $35,000 in profit. Throughout that year, we tweaked the indicator and updated different things to make it more effective. And we saw that play out in 2025, where we more than doubled that to 85,000. And that was based on starting with a $100,000 account, guys. So an incredible return, over 120,000 in 2 years on a $100,000 account is an amazing, amazing return. Of course, past results don't predict future stuff, blah, blah, blah. I'm not a financial planner, so if you need financial advice, please consult one. But if you follow the rules of what we do, the indicator is an absolutely amazing tool. Now, let me clarify a few things about that. It is not a silver bullet. It doesn't kill werewolves. You can't, stop a freight train. You can't do things that just aren't going to happen. It's going to lose. And it's going to lose a decent amount of the time. It's losing is part of trading, and metrics aren't in wins and losses. It's in risk reward. Because if you have a trading system that is built around a 3-to-1 risk reward system, well, you only need to be right 1 out of 4 times to break even. That's only 25% of wins just to break even. If you're 50% right, you make money. So don't get caught up in wins and losses on a single trade, a single day, a single week, a single month. It's not important. It really isn't. You need to see a system work over a year, over a quarter. I would say if you try something for 3 months and it just isn't working out, then it's still possible that system is fine. The market does go through periods of what I would call abnormal behavior, where it's just not reacting the way it does, say, 80 to 90% of the time. And so we just play the statistics. I talk about all the time, casinos make billions of dollars and they lose lots of bets. In fact, they lose tons of bets. They give out $100,000 jackpots all the time. Now, does that mean they're losing? No, it means that they play the statistics. The edge is forever in the casino's favor. And all that means is the casino knows what the edge is. They know it's the law of large numbers. They know that if you keep playing slot machines or roulette or blackjack, yeah, you're going to get lucky once out of 36 times, roughly, on roulette, but you're only getting paid 35 times your money or 34 times your money. So they aren't even giving you true odds. So the odds are forever in the casino's favor, and they know that over time they will build something spectacular like a $1 billion casino or a multi-billion-dollar casino. And that's what you have to understand. You want to be the casino, not the gambler. The casino is happy to take tons and tons of small bets and just rack up wins. Do they want whales in there? Of course. They don't mind that because it's not a big chunk of their, if a guy's betting $1 million and their bankroll is $1 billion, that's not a big deal to the casino. So you want to make sure you're sizing appropriately to your particular capital and then be the casino. Play the odds. What do odds mean? That means that most of the time it's going to happen one way, but sometimes it's going to happen the other way. You have to understand that about trading. Too many people think that you need one big home run trade, or you're looking for this big 1,000% trade that just happens once in a blue moon. And if you happen to hit it right and you stay in the entire time and you don't get trapped out because of all the traps they run, if you do all of those things, then sure, you can hit that 1 in a million shot, just like hitting a slot machine. Somebody's going to hit that $1 million jackpot, but there's going to be millions and millions of spins trying to do it. So they're going to make $4 million before they lose that million back or whatever. So you have to understand you want to be on the side of collecting money, not on the side of gambling, not on the side of home runs and jackpots. Jackpots are fun. They're neat. It's exciting to win 10,000, 100,000 in a day, whatever. It just doesn't happen that often. And more often than not, you're going to lose far more than that trying that style. So I preach proper trading risk management, proper trading setup, and proper trading metrics. And if you do all those things and follow the rules we give you, literally 2 years later, we're up over 120%, or I guess 120% on a 100K account. If you had 10K, would you be pretty happy if it was at 22K? Right? In 2 years, can you find any bank that could give you that on a CD or a savings account or anything else? Of course you can't. So we want to play by the rules, and the rules are simple. Number one, we don't trade after hours. Okay? It's just the volume doesn't work right with the indicator. It's not a great time to trade. Number two, we don't trade on trend days. So when the market is trending, we don't want to trade on that day. And the reason is we don't want to chase the trend because trends can often reverse quite violently, and we don't want to be chasing and caught there. And we don't want to trade against the trend because very often trends can keep going, and we don't know which it's going to be, and we don't want to get trapped in the chop of a trend day. So you just stay away from trend days. So that's rule number two. Rule number three is 3 strikes and you're out. If you have 3 losing trades in a row, we're done trading. We don't need to trade anymore. You're likely going to be emotionally angry. You're likely not going to use proper trading rules and stay true to yourself and the system. And it's telling you that chop is likely the recipe of the day. So if we have a sell signal that comes in and fails, and a sell signal that comes in and fails, and a sell signal that comes in and fails, it's telling you that one of two things. They're either getting ready to trend higher, or they're just chopping back and forth, and you're never going to get a good trade. So just take a day off. It's okay to not trade. In fact, it's an incredible thing to not trade, because that means you understand when trading conditions are right and when they're wrong. It's like looking at the weather forecast, right? And it says thunderstorms on Sunday, and you say, let's go to the beach on Sunday. Why would you do that? Well, I don't think it's going to be thunderstorms. It doesn't matter what you think. The probability is for thunderstorms. So maybe one day you go on a Sunday that is predicted for thunderstorms and it doesn't. Maybe. But most of the time, it's going to be a miserable experience. So why wouldn't you go on Saturday when the forecast is 85 and sunny? Right? So we want to trade on days that are comfortable. So we don't trade 3 strikes and you're out. We don't trade trend days. We don't trade after hours. Trying to think if I'm missing one. I think that's all of them. 3 simple rules. We take profit at 20% gain. So if we have a $1 option, when it hits $1.20, we take half of our trade off. And I'll show you here quickly why we do that. So we have an entry. Below that, we have a stop. Above that, we have a target. Obviously, it's the inverse if it's a short, right? So if our entry hits our first target, we take half off. If it keeps running, we have runners to collect, right? If we get stopped out, these stops are going to happen. You're going to get stopped out and have losing trades. But these 20% wins that we keep taking half off, They basically eliminate this, which means all of your runners are profit. And you're going to get several runners. Out of 10 trades, probably 4 to 5 of them are runners. And a runner is where we hit 20%, we take half off, and it keeps going and we keep taking profit. That happens quite often. It happens quite often where we get huge runners, 3, 4, 5, 6-point moves on the SPY. So if you follow the profit taking system, you follow the rules, it's a very simple thing to do. You'll do really well. So what does that mean overall? It means today may or may not be a winning day. I don't know. We'll see how it goes. It means today may or may not be a trend day. It means today may or may not be conducive to trading. We may get a 3 strikes and you're out. That doesn't mean the indicator doesn't work. That means that today wasn't the day to trade. And that happens quite often. And you got to get used to that if you want to be a successful professional trader. That is it. It is super simple in principle to be a professional trader. Watch out for a squeeze here, by the way. Super simple to be a professional trader in terms of what you need to do. It is super hard to execute being a professional trader. And that is really the difference between professionals and non-professionals. Most non-professionals are fairly decent at finding support. They're fairly decent at understanding price action. They're fairly decent at understanding basic to even intermediate market stuff, but they're terrible at emotional control. They're terrible at sizing. They're terrible at chasing. They're terrible at over trading. They're terrible at all of the things that crush your bank account. That's the big difference, is just you can't manage yourself if you're not a professional trader. You can't manage yourself. That's it. The indicator is here to help you manage yourself by telling you when to get in and telling you when to get out. And then if you can simply follow those rules and walk away when you're supposed to walk away, I promise you in a year, you'll be in a completely different place than you are right now, and it'll be a good place. But if you can't do that, and you chase, and you throw in bad trades, and you do all of these things, well, you're likely to struggle and suffer. By the way, failed breakdowns, we talked about that at the top. This is still one that everything is fine here. You get a lot of trapping. So what they want to do here is trap. That's the whole goal. They want to get as many people liquidated as they can, use it for their liquidity so they can buy up everything and squeeze. Again, as long as they hold this low, they can run all the traps they want. They'll do this, but eventually you'll see them squeeze to 86, and that'll be the target. Hopefully it's at the open and we can take that trade. That would be really nice. The last 2 days we've gotten really, really unlucky in that yesterday we had a sell 5 minutes before the open and the market sold straight down. And the day before that we had a buy 5 minutes before the open and it sold straight up. And we don't take those trades because they're in the after hours session. And we don't get mad about it. It's just unlucky. It just is what it is. You move on to the next trade. So January's been actually really slow for trading because we've had a lot of trend days, and that really happens quite often. They trade together in trends. The reason that happens is once a strong trend starts, it usually lasts a few days. So you get trend day after trend day up or trend day after trend day down. And right now we're seeing kind of trendy chop is what I would call it, where the market spikes up really hard, then spikes down really hard, then spikes up really hard, and each one of those is a trend. So January's been a slow month as far as trading goes. We are positive in January. We have a winning month going so far, but we just haven't had many trades, honestly. I think today is almost halfway through January, and we've had probably, 10 trades maybe. Usually we average about 2 to 3 trades a day. Just depending. We usually get a high and a low that we can buy and sell, and then after that, just depends on how long those take to play out. Some days are great. You get a quick move up, a quick move down, a quick move up, a quick move down. So we'll see how it goes today. It's been a little bit of volatility coming back in the market, so that's a good thing. Let's see who else here. Hiding in Daniel's room. Hi, I saw you have slimmer face in your few recent videos. I'm happy about that because overweight people tend to live shorter. Very blunt. Thank you. I am. I'm down 40 pounds. So I appreciate that. Thank you. I sold silver at 50. Now I feel the FOMO. It was a nice run, but still. Yeah, we're still in silver. So what you can do there so that you don't have the FOMO, this is a really cool trick. It's not a trick. It's just a trading thing. But sell some. If you think 50 is the number, sell a third, 2/3, half, whatever it is. sell some of it, and leave it to run in case it does go. Because if you listen or in my room, I talk all the time about silver and gold. And one of the things I tell you is that at the end of the metals complex, meaning, when all the metals are fully in rally mode, when it's getting close to the end of that, which I think we are, by the way, silver gets super vertical. It goes straight up, and it does it in a hurry. And it went from 40 to 80 in like 10 seconds. Obviously, I'm exaggerating, but it was crazy, and it's still running. Silver. I don't know what they're doing today, but I sold a little bit more of my silver yesterday. I'm down to a 10%, not silver, but my metals. I have a metals um, fund, and I sold down to 10% in it because let's see, silver in the after hours. Yeah, they're +4. They're still running. Gold after hours is also +4. So silver and gold still running, still vertical, but the risk is rising. But I still have a 10% stake because I want to catch as much of that run as I can, and I'll trail stops and that way I don't have the FOMO. I always have some silver and gold tracking. For those of you who are interested, 2 years ago in 2024, around April, I told my group, this is a great reason to be in my group, guys, that the S&P risks were rising, and they still are. The S&P has gone up some since then, obviously, but not as much as the metals. We bought this fund here. It's called EKWAX, and as of right now, it's at 159.56. We bought it at 49, and we put our 401ks into it. So this was my retirement fund. It's a mutual fund, so that's why we put our 401ks into it. You can do it that way. And we have almost tripled our retirement in 2 years. So that's always nice to have, triple the money you were going to have. Now, it's not a full triple because we take profit along the way, but my retirement is more than doubled over that time. And I also have a small stake. So I have 16, right now I have about 17% in a fund tied to the S&P, which has done extraordinarily well. I have 10% in metals now. I did have about 80% in metals and 16% in the S&P, but I've trimmed down to 10% in metals because I feel like we're getting close to the end and the risk is starting to get high. So now I'm sitting on about 70% cash or 75% cash roughly. And I'm waiting for the next buying opportunity and the next market, quite frankly. There's going to be markets that we are looking for. Well, there's the buy in the 5 minutes before the open again. The next market may be EEM, emerging markets, something like that. But we place our money very, very cautiously. We want to protect our 401k. And what we've been able to do is generally buy and sell near major tops and bottoms. So I've been able to protect my 401k. And while most people lost, 50% of their 401k from 2022, the start of 2022 toward October of 2022, we had sold near the start of 2022 and bought back, I think in November of 2022, so slightly after the bottom. You're never going to get the exact bottom. You want to see a setup for up. But we were able to save like 30% of that drop. And that allows us to buy back more shares. So when the market goes up, everybody else lost money and is getting back to even when it gets back to the all-time highs. Whereas when it's back to the all-time highs for us, we're up a ton of money. So just some things to think about if you're not in my room. We do more than just day trade and swing trade. We manage money. And to be clear, I am not a financial advisor. If you need true financial advice, you need to seek a financial advisor out and speak to them. But I do give my opinions on what I do with my money so that I can do things, preserve my capital and do the things that I like to do. All right, we got about 5 minutes to the open. Get through here really quick. I wish I was trading. I'm still sitting in the doctor's room with a broken foot. Will, what'd you do, man? That's no good. Welcome to the stream. Jack Barnes, 40 pounds. Holy hell, JG. Congrats. Thanks, man. I'm a drug user, so it's not all me. I've been using Zeptide or whatever. So it's a miracle of medicine. It's helped me out. I have had most of my life a voracious appetite that never really gets full, and this has helped immensely with my habits and my appetite and all that stuff. So my goal is to get off of it because I hate drugs and I don't want to be on them, but I was having weight issues and unable to kind of curb myself. So I've really changed my eating habits quite a bit, and I hope that it translates once I'm done with the medicine. Morning is shared in Q chart with the group is set to ES. Oh, sorry. Let me switch that real quick before we get started here. It's on NQ. Maybe you just need to refresh yours. I'll switch it, then switch it back and save it. Maybe that'll help. But it was on NQ. Here, let me save it. Maybe clear your cookies or something, but it should be on there. Okay, they rejected that buy, so maybe we will. Maybe we will still get a shot at it. We got a minute and a half here, so let me get set up. It does look like we're going to look for a buy here at the open. And it may be literally at the open, so be ready for that. If they don't try to steal it from us in the pre-market again with a quick surge right before the bell, they like to do that. Let me get my trading platform pulled up here. I can be ready. We're going to look at about a 691 strike if we do get one. A buy, I mean. Okay, and that is a call. Okay, I think we're ready. All right, market moves fast at the open, so be aware of that. Hopefully we get the buy signal and the rocket ride back up, hopefully all the way to 86 pretty quickly. They may steal it from us. We've got 38 seconds. Let's see if they don't get it. It's gonna get it. Do you have a buy on SPY? I don't have one yet. Oh, on SPY? I'm not even looking at SPY. I need to go to SPY. You're right. Sorry, I've been on the futures watching those for. I don't have a buy right now on the SPY, but I would imagine the open is going to give us one. So be quick on the draw here, guys. Don't just snap call it, though. Make sure you get the buy. There's the bell. All over the place here. NQ going in the wrong direction. Yeah, NQ's the problem here. So SPY doing its job. NQ not doing its job. So we need the NQ to play along. Until the NQ gets on board, this is not going to go anywhere. RTY slightly red, bank slightly red, transport slightly red. So context, we are down on the day to start and things are red. So we'll see if they follow through to the downside.
Order filled.
Testing the pre-market low here on the SPY. Okay, they spiked through the pre-market low. So a trend day is defined by breaking the pre-market low or the pre-market high, and then back testing the 8, which is in red, or the 21, which is in blue, or the black line, which is VWAP, and then making another low. So if this is the low, let's say that 690 to 09 is the low, and they backtest these moving averages and come back down and break this low, then we have a trend day on our hands. Now, if you know anything about Mentor Q, we have a 1-day max level, and that is going to be, or 1-day minimum. And the end of day level, let me see here. The end of day is the bottom lower one. So the active end of day level is down here around 688. The intraday level is 689. So this is a very key level to watch for the bulls. The bulls will want to hold this. Now, the 1-day min, think of that as a shoreline of an ocean. We know where the tides come up to, right? So we can kind of build houses around the oceans. But on hurricane days, the tides come much further and into the houses. So the 1-day min, think of as your shoreline. Most of the time, most days they're going to hold because they know where the options flows are and where the money is. But there are days that there are hurricanes where there's just too much money coming in, and it is a absolute tsunami, and it can't stop the tide. So we'll still look for a buy here. If we can get one. Oh, we have really high options prices today. Do I have to? I did not look. Yeah. I feel like we should have a buy here. I wonder if I got a frozen indicator. Hold on one second, guys. Let me fix this real quick. Yeah. So the SPY is the problem today. So what happened was the NQ went too low and could never get on board with the buy over here. And there's a setting. Pro, we go to settings. Maximum candles between the 3 tickers. So what happens, this is something that you'll need. It's nice to know. You don't need to know. The maximum candles between the 3 tickers is 2. So what that means is the buy on the NQ, the buy signal on the ES, and the buy signal on the SPY have to come within 2 candles of each other. The SPY buy signal came 2 candles ago. Or 3 candles ago, I should say. The ES was also 3 candles ago, and the NQ just got a buy signal. So we are not in sync. In other words, they did not come within enough time of each other. And because of that, we're unlikely to get a buy signal here. Because what we want is we want the markets to be moving in step. So if ES and SPY are in a buy, but NQ is not, then they're not in sync. And when the markets are not in sync, they don't move together very well. They don't tend to follow through. So when they're not in sync, we don't see follow through. And you're seeing that here. So the NQ was not in sync. We did not get a buy signal because of that. And that's one of the cool things about the indicator is it doesn't just want the SPY or the ES or the NQ to be doing okay. There are times where they are divergent. And if the NQ is not on board with the buying, or the ES is not on board with the buying, or the SPY is not on board with the buying, we're not going to get a buy signal because they're not moving in unison. If they're not moving in unison, that means there's not broad buying across markets. And then we tend to chop or fail the trade. You would have failed the trade here, right? So you would have got a long here, it would have went up a little bit and then stopped you out. So it's a protection mechanism. It can be frustrating, but if you were frustrated we didn't get a buy here, you shouldn't be now, right? That's why we have those things in place. So what we need is we need some more selling to get the SPY or ES back into a sell mode so that it can issue a buy signal. And that's a lot of higher level trade speak of what's going on in the algorithm. You guys can't see that, but essentially they run through buy and sell cycles. And in order to get a buy signal, you need the symbol to be in a sell cycle. And in order to get a sell signal, you need it to be in a buying cycle. So you had a buy here, they chopped around, they took it up, and then it completed a buy cycle here, which was mostly a kind of a consolidation period. So it's weakness in the selling. There was heavy selling to the downside. And then it says, hey, there's weakness in the selling. We want to buy this market. Well, there was weakness. The selling stopped for a while, but it was consolidation selling. It was or buying. It wasn't squeeze buying. They did fail that breakdown setup, so we'll see if they can retry here. So you got a new dead cat high right here. They came down and spiked the low. They went back above 69, and now they're back below it. So if they reclaim 69 again, on the ES 69.69, if they reclaim that level again, we can definitely see a squeeze higher here. Okay, so ES has now moved back into a sell or into selling. So if they can close the candle down here around these levels, then we have a potential to get a buy again. But we have a very, what's the word I'm looking for? My prices aren't updating. God dang it. All right, let me close and reopen my Schwab account. There you go. Apologies, guys. I didn't realize my prices weren't updating on the Thinkorswim. So hopefully we don't get a buy signal right here. If we do get a buy signal, please take it. I can't give you the levels though. There it is right there. So your stop's going to be 690. That was 80 something. So 690.30 is going to be your stop. I'm still trying to get back onto Thinkorswim here, so I don't have prices for you if somebody knows they can do it. One second, and I'll get back to your comments as well. Any thoughts on what will happen at 10 a.m. when tariff decision releases? I have none of those thoughts. Still waiting on Thinkorswim, guys. Sorry. I don't worry about that stuff, to be quite honest with you. News is noise. I don't care what the news says, what it thinks, how it acts. Can the market move on news? 100%. I'm not saying the market doesn't move on news. I'm saying that what the news is irrelevant. You can have good news make the market go down, bad news make the market go up. It is simply a catalyst that moves the market. I don't think the tariff decision has any effect on what we're expecting overall, which is 7,000. Can it spike the market down for a little bit? Yeah, but I expect the market to come right back. I call that an ants marching event, where the ants are marching to 7,000 on the SPX. They're on their way there. Have we sold off a little bit? Sure, that's going to happen. But um, the ants are marching to 7,000. And if you ever watch ants march toward a target, right? So let's say there's a sugar cube or something, um, and they're marching toward it. If you put something in their way, they are going to scatter and do all kinds of crazy things. Like, think of a Fed day where the market goes up, down, all around. They're going to do all kinds of crazy things, but eventually they're going to settle back down and figure out either how to get around the stick you put down or over the stick. They're going to get back to the sugar cube. They'll figure it out. They're not concerned. That trade stopped out, by the way, so I don't have any prices for you. I'm sorry. I'm almost back in. They're doing some updates on TD Ameritrade, so we're about to set a trend day if they get a little low here. I need to reset my. Hold on 1 second on my settings here. Okay, so they have made a new low. That does mean we have parameters for a trend day down. Now, because we're at the 1-day min, this is a very big support level. You can see the put support in the 1-day min over here on the edge of my screen. Because we're there, I will take the first or the next buy. I'll take one more shot at a buy because very, very often this will hold the market, but they do have room down to 688 here. So I'm not going to front run anything. I'm not going to try to buy just because we're at the 1-day min. I want this to turn and show me a buy signal, and then we'll see what happens next. But my suspicion is they will find a low here and rally. We just have to wait for it. Or we get a tsunami day. Those happen, especially to the downside. You get elevator down, elevator down, stairs back up. Okay, I think we're back in as it comes up here slowly. I do apologize for not being able to trade that first one. Hopefully I can get in on this one if we come on. Go trade. Clearly TD Ameritrade is having some traffic issues today or something. Okay, we're going to be looking at so far. Right now, I'm going to sit on a 690 strike. See how that goes. Like I said, January's been really slow for trading because of the constant trend days. This is another one. So we'll see if we can get one buy. That's what we'll take here, just because we're at the 1-day minimum. So if we were way up here, let's say we're up at 692.98 and we had a trend day down and the 1-day min was down here, I would have no interest in taking the buy. They have plenty of room to the downside. But because we are below this 1-day minimum and coming into this 1-day minimum, this is going to be a nice area to look for support. But this can be a tsunami day to the downside. So we'll be careful because they slice through this 1-day minimum. And this is the end of day 1-day minimum. So I assume they will close the day above this line eventually. They're above it now, obviously. But I'm saying if they plow through it, they will get back above it. So that's the only reason I'm entertaining a long here. You think it'll crush down at 10:02? Then that means it's probably going up. I think probably they want you to think it's going to crush down because of the tariff ruling. always think and we're already at the 1 day minimum. So always think in terms of, I'm not saying it won't crush down at 10:02. I'm saying always think in terms of how can they trap the most people. And if everybody thinks the tariff ruling is going to be ruled, whatever, illegal or, whatever, and everybody's thinking the market's going to go down, perfect squeeze. See nice volume on the first NQ bar, looks third deviation down, longer support. MACD looks bullish. Yeah, I tend to agree with the bullish scenario, but we'll see. I don't get to tell the market what to do. It tells me what to do. How many percent would you give that 7,000 won't be reached in the coming 2 to 3 years? 0. Okay, not 0. Nothing is 0%. I would say it is 95% likely we hit 7,000 this month. How's that? Or over the first quarter of the year. December, January have been miserable for day trading. Lots of fake outs and chop. Yeah, they haven't been great. December, I think we didn't have a ton of trades, and I always take the last week off because December is just a miserable month anyway. It's holiday trading. It sucks. I think we were up 1,500 for December, so it was basically like not winning any, like nothing, but we didn't lose money, so that's what matters. You're very likely to get a lot of chop at 10 o'clock. Think of it like a Fed day. And if that's the case, we may get stopped out on a trade there, or you may just get an absolute rocket ride in one direction. But we'll have to see what the market gives us. Right now the market is pretty oversold in the shorter term. In the longer term, it's not, but in the 5 minute to 15 minute range, it's oversold. It balanced out a little bit there in the last couple hours before the open, but it's due a bounce anyway. I'm not saying we're going to all-time highs yet, but it's certainly due a bounce. And just to be clear, guys, if ES goes down to 6,900, 6,850, I still expect 7,000. $69.35 is major support. So we need to watch that zone. 69.50 is very, very big support as well. So those are two zones to keep an eye on. Remember, guys, most of the biggest moves in the market aren't predictable in the sense, let me be clear about that, in the sense that you think they are. In other words, we're waiting for a tariff ruling to predict the market is going down. Rarely does the market allow that to happen because that makes it too easy. Um, the market may go down, but I would suspect a significant bounce first, as a trap. They want to stop out people trying to short. They want to trap people trying to get long, and then they can move it down, or vice versa. They just rip it long. Most of the biggest market moves in history have happened on no news events whatsoever. No political news events, no financial news events, just the market rallied or the market dropped and was not predicted by the news. Many market events that were huge moves were to the opposite of what the news conveyed. In other words, the news was deemed to be positive and the market went down in a huge move, or vice versa. For instance, in October of 22, we received the highest CPI report in 7 decades, and the market went on to make one of the biggest rallies ever. In March of 2020, COVID was running rampant. There was nobody that knew anything about it. We didn't know how serious it was. We didn't have vaccines. The countries were shutting down. Businesses were going out of business. We were hemorrhaging money to pay people worldwide. Global financial markets were catastrophic. And at the time that the market bottomed and rallied, nobody knew anything about COVID. Nobody knew if it was going to be, a world ender. Nobody knew what it was. They were guessing. And the market went on to rally in one of the biggest rallies of all time. There's been studies done that have shown that if you had the news in advance, if you knew what the news was going to say before it happened, you would still only have a 50-50 shot of getting the move right. That tells you how irrelevant the news is. Oh, you're talking about the gamma, yeah. No, the gamma obviously will move, and the premiums will definitely change if the news is postponed or the market slows, goes up or whatever. That can definitely change for sure. All right. Well, I guess 5 minutes and you'll get some kind of ruling. Good call on Bitcoin yesterday. Too bad I didn't trade it. We still have time. Well, it's a weekly signal, so I'm looking for a minimum of 100K. I didn't see what it was at today. Actually, is it up? I assume then. Yeah, 96,000. So it's breaking out to the upside. 100K is the minimum target. I think 108 is also a place to be. And 140 is if it just goes nuts. They are consolidating around 50 here. 50 on the ES, I should say. So 69.50 is big support. We will see if they spike below it and recover it and then squeeze, or if it's all the way down to 35. That would be the next target down on the ES. Obviously 680, 687.90 or so is going to be the target on the SPY. And we'll look for a potential recovery from there. So you see them dive down here and come back up. So a big rejection. You see a wick here. You're seeing a wick here, depending on how they close this bar. If they can't get down below this, and obviously the volatility may allow them to get below it, but if they can't get down below this 50 zone, again, this will turn up pretty strong and at least come back up into the open, which is 69, 690, 68, and then above that you have 691.35 as the next major, or next, not major, next resistance, and then 692 is your next major resistance. Guys, if you like the Mentor Q levels, they're incredibly important. They are really valuable for the market. I do have a link for those in the description to get them at a discount. They are excellent tools on your chart, and they give them to you for all signals, all symbols and time frames and stuff. So they're the day-to-day options levels, and they tell you where the money is, where the market makers are. So, for instance, the one-day minimum is where the market makers really want to hold, because getting below these levels here is where negative gamma takes hold, and they have to start really hedging by selling futures. So when options are traded on the SPY, they sell futures or buy futures to hedge them. And the market makers are simply like a sports book. They don't want to necessarily be heavy on one side or the other. They just want the juice. So they want the middle ground of, if there's $1 million on long and there's $1 million on short, they're going to collect the $100,000 worth of juice in the middle, because they get the premium. Because when you buy when you buy and sell, there is a spread in between the two prices, and they collect that spread. So if they get underwater on one side of the aisle, in other words, if there's too many calls, or in this case, too many sells, they have to start selling futures to hedge the overwhelming amount of sales, so that if price goes down, they're making that money back on futures and not getting run over. That all moves very quickly. Okay, so they're now down to 69.50, making another lower low here. This is good support. Look for a sweep of 50 and a reclaim. Otherwise, we are down into the 35 zone. Right now we do have trend day parameters. Okay, looking like they're going down toward 35. It is 10 o'clock. That was an algo-driven move. I guarantee you nobody knows what the judgment is yet. And that's why, again, the news doesn't matter. The algo did that before anybody could possibly know what was going on there. He had a program to sell there to a certain level and potentially trap the one-day minimum for the end of day is hit. This is a key level for the market to hold, not necessarily the bulls. The market makers want to hold this. So we'll watch here for a reversal. If we don't get one, or we get one and it fails, we'll be done for the day, because we don't chase the down move and we don't trade on trend days. This is a trend day down right now. And for those of you who joined late, a trend day is defined by breaking either the pre-market low or the pre-market high. In this case, we're down to the pre-market low. So they broke it. They came back and tested the moving averages here. And then they broke that low, which tells you we are in a trend and likely to follow through to the downside. That doesn't mean we can't bounce. And also, it doesn't mean we can't rally, because we're at the one-day min, which, again, think of that like the shoreline. The shoreline holds most of the time, unless we get a hurricane. If we get a hurricane, well, off we go. So that's the level where brokers switch off algo, put down coffee, and switch to manual drive. No, the algos know how to do it. Back in the old days, yes, before there were algos and computer trading and stuff, that's where the market makers had to start to really pay attention. But now the algos can just it just calculates it and says, here's our positioning, here's where we're at, and what do we need to buy or sell to keep us from being underwater. So the first thing they want to do at this level is buy. They're trying to buy their way out of it. because buying is easier than hedging. Hedging is harder because the faster the market moves down, the more they have to hedge, and then it's really a kind of pain in the butt. And they don't experience this very often. It's almost, you know, 1 to 3% of the time that the 1 day min or 1 day max doesn't hold. Usually they're able to buy their way out of it or sell their way out of it to the upside. But there are days, like I said, that are hurricanes where the shoreline doesn't hold, the water comes into the houses, and everybody gets screwed. Remember a key factor. If I want to buy the market higher, I have to sell the market first. That is, and if I want to sell the market lower, I have to buy the market first. And the reason for that is that you get to a certain point where there are no more sellers because they're just getting run through, right? Market's going up, market's going up, market's going up. The sellers are like, F this, I don't want to be a part of it. So they just capitulate and they buy, and the market gets to a point where there are no sellers left. And when there's no sellers left, it creates kind of this vacuum where one, there's nobody to sell to. So the buyers can't buy the market from people who aren't selling the market. Now, are there always somebody to sell the market? Yes, the market makers. But if the institutions want to continue pushing price higher, they need somebody to continue to sell them the market. And as that dries up, they need to trap people. So they need to sell the market first, trap people into late sells, get to the level they want to rebuy. So they take profit up here. They start selling the market. So they take profit up here. They push the market down with huge institutional sells because everybody wants to buy the market and they overwhelm them. Well, buyers dry up here too. So as it gets higher and higher, less and less people want to buy the highs because it gets more and more precarious. So when the sellers come in, there's a vacuum that drops it down. It scares everybody. They get short. The institutions say, perfect, we hit our level, we've made our profit. Now we have sellers to buy into, or that's our liquidity. That's why it's called a liquidity sweep. That's our liquidity to get into the market. So our liquidity up here was the buyers, our liquidity down here is the sellers to get back into the market at the level we want and then push it higher. Because now the sellers want to be here going, hey, this is where we sold. This is where we want to get back in. Well, that was the institutions. Retail's up here sitting now, and the institutions get back, they squeeze them, and off we go higher. Okay? So in order to buy the market higher, you must sell it first. And in order to sell the market lower, you must buy it first. The inverse is true of what I just said. So the market, everybody, I did see people saying this could be a black swan event, which is, I wouldn't say it's laughable, but it is certainly, in my opinion, not going to be a black swan event. Uh, Black swan events are typically not forecasted a week in advance. This will likely be a trap, in my opinion. I think the bulls will likely step in and give us some kind of rally before the market goes lower. That doesn't mean I'm buying the market without a signal here. I want to see a buy signal first, and then that doesn't mean I'm just sitting on it and hoping we go back to 7,000 straight away. We'll play it level to level. We'll take profits where we should. We'll manage our trade properly. But it does mean that I think that there's a strong potential for a super bounce here. I wouldn't say a strong potential. There's a pretty good potential for a strong bounce here. Sells, sell downs get squeezed back up, and squeezes get sold back down. Just depends on the level that the bulls are going to step in and squeeze at. All right, we're still sitting on that 690 call. Should we get it? Again, we are in a trend day down, so the only reason we have a trade potential is that we're at this 1 day minimum and bouncing, which is what we want to see. Typically, this is going to hold the market. Did anybody see, is there a ruling yet? The CNBC is not showing anything. So. They got to get back through 50, 69.50 on the ES. If they get back through that, um, 69, 69, 69 would be the next number. I'm such a child. And then if they get through that, 86 would be the next number. That's on the ES. No ruling yet. Home building news a few minutes ago. The home builders. Sean, welcome to the stream. Will, my doctor's slower than the Supreme Court. I'm still in the waiting room. Oh my gosh, with a broken foot. That's terrible. Otis, welcome to the stream. Weekly indicator and day seem to have triggered. How do you trade this? You trust the indicator. Last week there was a short. I talked about it yesterday on the midday call. And had you trusted that short, you'd be in a pretty good place right now. They closed last week at like, I don't know, 7,000 and change. So you'd have made 50 points of downside already. You could have taken a little bit off here and then seen if they follow through to the downside. I'm not here to tell you they can't sell off or that the top isn't in. I'm here to say it seems very unlikely that they're going to get to 69.85 on the SPX and not go ahead and tag 7,000. That doesn't mean that because they were at 69.85, they're going to 7,000. That means that the pullbacks at some point will get bought and run back up there. That I don't think the major top is in just yet. I think we're getting closer, obviously. But I think that some kind of spike through 7,000 on the SPX, 7,010, 7,020, something like that would be very reasonable. Oh boy, that's fast. Okay. All right. I got $1.40. I'm going to set my stop at 689. We'll see if this holds. If this doesn't hold, we'll be done for the day. That was all over the place. So I don't know if Hopefully they can just go ahead and go here and give us squeeze. That's what we're looking for. All right, there's $1.60, so we're going to move our stops to break even at $1.40. We may get stopped out on that, guys. I'm going by my rules, which are when you get 15% up, you move your stop to break even so that you don't get whipsawed around, and then they get up there close to where you're going to take profit, and then you don't get profit. So I have my stop at $1.40. We'll see if they catch it here or not. It looks like they may come down and grab it. Yeah, they just stopped me out at break even, and that's okay. I don't care. This could be a very whippy move. It could be an incredible move up. But for me, we're not even supposed to technically be trading this anyway, but because it's off of the 1 day minimum, I took it. Yeah, they're gonna go ahead and shoot higher here, and that's they're at the 21. We'll give them. Yeah. If you're still in, 168 would be the 20% take. They're about to hit that. They just did. So the indicator was correct. My, I have a set of stop rules that I have for a reason, because usually when you get to 15% profit and then fail, the trade is going to fail, and you don't want to give up all of that extra 50 cents to the downside. It's helped us quite a bit, actually. In this case, it did not, but that is part of how we trade. So, indicator nailed it. I think this could be a pretty strong squeeze. So, if you're in, good luck. Let's see if they can take back 69 here. If they take back 69, they're on their way there now. Then you could see, like I said, really 73 is what I'm going to say. 69 is the bottom of that support. 73 is the top end right here. Right here. So 69, 73, they take this out on the futures, then we're very likely headed to 86 up here. And from there, we'll see what happens. But no Supreme Court decision today. Shocking. And that's the thing, guys. Everybody's waiting on the news. Everybody's loaded up short. And what are they able to do? Squeeze the heck out of them. So, the trade's it's a good trade. You should. We took it, just didn't quite work out because of the whipsaw. The real problem is how fast it moved. The entry on the trade was down around 130, 133, but I couldn't get in until 140 because of how fast it moved. So stuff happens. No, it was a break-even trade. It wasn't like we lost any money, but when it moves fast like that, it does make it more difficult. With that, they did backtest 69 to 73 here. Again, over 73 and 86 is likely the target. Over 86 and 99 is likely the target. So I wouldn't be shocked to see him run it right back to 7,000 ES. But we take it level to level. So if you are in, you should have taken profit here at 69, or that would have been about where you took 20% off, and then you should take some off at 86, and so on. Guys, we are running an incredible indicator deal. I'm gonna get ready to wrap it up here for today, because I'm not. There'll be no more trades today for me. Check out that indicator deal in the description. There's a link for it. It's only $39 a month, and you're getting our price action, which tells you how to decipher all of this stuff. 2-hour masterclass. You're getting our advanced Elliott Wave, which are both about $200. One's 147 and the other one's 67, so that's $214 right there. The indicator is normally 59 a month. You're getting it for 39 a month, and it's a really incredible deal. So if you want to jump on that, please do so. That's a New Year's sale, since this is the second trading of the new year. We'll keep it going through January. Thank you guys for being on the stream. I really appreciate it. we'll be back next week to do it all over again and go from there. All right. Have a wonderful hump day. Good luck, everybody.